when the United Nations was first created. It was a Secretary General at the time that famously put it, it wasn't created to take mankind to heaven, but rather to save us from hell. And I think the role of the United Nations in preventing global conflict and mitigating human suffering, I think that's something that has been pivotal to the fundamental sort of foundation of why the UN exists. Peace and security, rather than, I suppose, pursuing objectives that are not really grounded in the realities that we face. But having said that, we are in a world where there's rising debt, there's climate vulnerability, there's a huge finance divide, all of which is really pointing to a number of challenges that the development world is facing. So in many ways, it almost seems like work that is unfinished. Has a lot happened? Of course. But at the same time, I think we've seen through the Finance for Development conference that recently took place in Seville, Spain, that much more needs to be done in terms of driving capital, driving finance to development priorities around the world. So, in a nutshell, I think the organization has achieved a lot over the last 80 years, but certainly there's a lot more that needs to be done.
Now, in your previous role as the Executive Coordinator for Environmental Finance for the UN Development Programme, you oversaw a $5 billion nature, climate and energy finance portfolio that was over 140 countries. How do you use that experience, that knowledge, to determine the future direction of the UN Capital Development Fund?
Indeed. I mean, I think I have the privilege of having worked with the United Nations Development Programme to try and help countries access resourcing to address many of their priorities on nature, climate, energy, not for the sake of those topics in themselves, but rather because of the intricate interface with development that needs to, advance, and it's very much underpinned by the ecosystem-based energy accessibility, and of course the increasing incidence of weather-related events that countries have to address. And I think what I have learned from that experience is that ultimately, for the scale of impact that we need to see, it's not really just about the public sector. It is, I think, more relevant than ever before is how we can engage and crowd in private finance to help address the kinds of solutions that we need from a job perspective, but also rather from a human development angle. So for me, I think the opportunity that certainly the United Nations Capital Development Fund now presents, because of its unique capital mandate and the fact that it's not credit rated, it's able to absorb risks in a way that no other UN entity can, and many other, including multilateral development banks or development finance institutions cannot. I feel like we have an immense role to play in crowding in private capital to be an integral part of the development solution. So that's what we're now trying to do here at UN Capital Development Fund.
Right, I want to talk a little bit more about funding. I mean, you've been in your new role as the Executive Secretary of the United Nations Capital Development Fund for a little over a year right now. The fund's investment mandate is to augment the deployment, I'm quoting here, of grants, loans and guarantees in the form of blended finance. When you talk about private funding, is that what goes to blending finance?
Yeah, I mean, look, at the end of the day, what we're talking about is that there's, the global economy is in the order of what, 450, 480, nearly $500 trillion. That's the combined accumulation of sort of global assets, if you like. How much of that is making its way to the developing world? Less than 4%. right? The remainder is actually circulating within the developed countries, the richest countries in the world. So we clearly have an issue in terms of, it's not that there isn't resourcing around, it's not getting to where it needs to go in the form and shape and speed that we need that to happen. Why is that? It's because one of the things is risk. There are far too many risks associated with that finance going to certain parts of the world, and that needs to be addressed. So blended financing is really when you start using very scarce public money to try and create the conditions that are appropriate for private finance to get to work, for market solutions to get to work. And that is really the catalytic role that UNCDF is now trying to advance. Can we take $1 of public money and turn it into $4 or $5, which is private finance that's coming in? Now, has this worked? In theory, I have to say, and the research suggests that it hasn't worked in quite the way it has been envisaged. Most of the blending that is currently happening is when public money is essentially de-risking other forms of public money. So, money from tax receipts de-risks money from, foundations or philanthropy or, that sort of makeup. What we really need to see is private finance being crowded in, and we're certainly seeing the emerging prospects of that working out, especially if public money is deployed through an appropriate risk-absorbing facility. And that's where UNCDF is essentially trying to play. And we see that this has worked. I mean, even in countries that are in conflict, I don't want to name the country because of security reasons, but in one of the most, well-known countries where there's significant conflict, we've demonstrated just through the deployment of $1 million that you can unlock $10 million of private capital within that local economy. Tanzania recently issued a water bond, which we spent about $1 million trying to raise that bond, but we to set up the bond, it raised about $24 million, 65% of which came from domestic investors. So it is possible through the sort of the smart use of public finance to try and crowd in private capital that ultimately will go a longer way to address the challenges that we're talking about than pure public funds.